Good day, ladies and gentlemen, and welcome to Zedge's earnings conference call for the second fiscal quarter of 2026. During management's prepared remarks, all participants will be in a listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation by Zedge's management, there will be an opportunity to ask questions. To ask a question, please press star, then 1 on your touch-tone phone. To withdraw your question, please press star 2. I will now turn the call over to Mr. Brian Siegel. Sir, the floor is yours.
Thank you, operator. During today's call, Jonathan Wright, Zedge's Chief Executive Officer, and Yi Tsai, Zedge's Chief Financial Officer, will discuss Zedge's financial and operational results that were reported today. Any forward-looking statements made during this conference call during the prepared remarks or in the question and answer session, whether general or specific in nature, are subject to risks and uncertainties that may cause actual results in the future to differ materially from those discussed on today's calls. These risks and uncertainties include, but are not limited to, specific risks and uncertainties disclosed in Zedge's periodic SEC filings. Zedge assumes no obligation to update any forward-looking statements or to update the factors that may cause actual results to differ materially from those that they forecast. Please note that our earnings release is available on the Investor Relations page of the Zedge website and has also been filed on Form 8-K with the SEC. Finally, on this call, we will use non-GAAP measures. Examples include non-GAAP EPS, non-GAAP net income, and adjusted EBITDA. Please see our earnings release for an explanation of our use of these non-GAAP measures. Now I'd like to turn the call over to Jonathan.
Thank you, Brian, and good afternoon, everyone. Let me start with what stood out to me this quarter. The quality of our monetization continues to improve, and this is leading to record results. We achieved record levels of revenue and average revenue per monthly active user in our seasonally strongest quarter, driven by continued advertising optimization, record active subscription numbers, and record Zedge Premium GTV. What that tells me is that the investments we have made in optimizing our ad inventory and subscription offerings continue to pay off. Although MAU contraction remains, we are focused on acquiring higher value users and monetizing our audience more effectively. That makes the core marketplace more resilient and durable. Turning to innovation, starting with data seeds. It remains early, and we are excited about this market and its incredible growth potential. The appetite for AI training data is virtually insatiable, and we are productizing offerings we believe can meet the needs of model builders and doing so intelligently and cost-effectively. This is in contrast to the many venture-funded startups in this market, many of which are overcapitalized and burning money like there is no tomorrow. Data is the fuel that powers AI models, and we do not believe this is a bubble. Our challenge is in making the right bets, continuing to grow our library of relevant content, and executing well in a rapidly developing market. We're witnessing continued inbound interest and have started building an outbound pipeline. Some of our customers have returned, placing new, larger orders after proving that we were able to meet their highly discerning needs with high-quality outcomes. Enterprise customers tend to scale relationships over time based on consistent and reliable performance. Our operational focus is on building a high-quality outbound pipeline and on better qualifying inbound requests. Not every opportunity converts, and not every deal is feasible. Being selective, focusing on those needs that we can meet, and executing well on the opportunities we pursue is critical to building long-term credibility in the enterprise market. In addition, we are building an off-the-shelf, or OTS, catalog to drive down cost and accelerate order delivery. Our production cloud is growing as well, with a set of vetted production teams that we can call on to create data sets as needed. Revenue remains lumpy at this stage, but engagement trends are encouraging. Our priority is building the infrastructure, supply depth, and operational rigor required to support larger, more consistent opportunities over time without getting too far ahead of ourselves and hurting profitability. Our innovation team is humming. We recently launched 2 more alpha products, bringing us halfway toward our goal of introducing up to 6 this fiscal year. As expected, not every initiative will make the cut, but we learn from each new launch. SynCat, our first release under the Product Innovation Team framework, did not deliver the KPIs we were shooting for, and we are ceasing development of this product. Our framework is simple: pre-qualify, develop rapidly, test quickly, measure objectively, and invest in the winners. Adopting this operating mentality is challenging and requires great discipline and the ability to avoid getting attached to a product because of personal affinities. Turning to Emojipedia, we continue to face structural headwinds tied to the evolving field of search, and we recorded a non-cash impairment this quarter to reflect the likely impact of these changes. The business remains profitable, and the cost structure, which had always been efficient, is aligned accordingly. GuruShots appears to be stabilizing and is being operated conservatively following last year's restructuring as we evaluate longer-term options. From a capital allocation standpoint, we generated solid free cash flow even after investing in data seeds, tape deck, and other innovation priorities. Cash strengthened to $19.1 million with 0 debt. Our free cash flow yield remains in the double digits, and we are now paying a quarterly dividend while continuing to invest in innovation and repurchasing shares when the market conditions are right. Stepping back, our priorities are straightforward: strengthen monetization in the marketplace, build data seeds deliberately, and expand our innovation pipeline in a disciplined way. We believe that balance positions us well for the remainder of fiscal 2026. With that, I'll turn it over to E.
Thank you, Jonathan. Total revenue for the second quarter was $8.3 million, up 18.3% from last year. Remember, historically, Q2 is our seasonally strongest quarter due to the holidays. There are a couple of items of note in the quarter's results. First, Zedge Marketplace revenue was up over 21% year over year, driven by strong advertising CPMs and subscription revenue. Consistent with Jonathan's comments earlier and on our last call, Emojipedia was a significant drag on top-line growth, and when combined with year-over-year declines at GuruShots, were a material drag on our overall revenue growth rate. That said, GuruShots continues to stabilize on a sequential basis. Advertising revenue was up 18.3% for the quarter, as strong growth in the Zedge Marketplace was offset by lower ad revenue at Emojipedia. Zedge Plus subscription revenue increased 33% year over year, and our net active subscriber base grew 49%, reaching nearly 1.2 million subscribers. We continue to optimize our subscription plans and are seeing the benefits of those changes. Deferred revenue, which primarily represents subscription-related revenue, reached $6 million, up 5% sequentially and 39% year over year. This is an important metric as it reflects future revenue that essentially carries a 100% gross margin. Zedge Premium GTV was up 15.7% from the year-ago quarter, and ARPMAU increased 47.6%, continuing the shift toward higher-value users and improved monetization efficiency. This quarter, note that our digital goods and services revenue includes contributions from both GuruShots and data seeds, with a vast majority being generated by GuruShots at this stage, as we recognize minimal DataSeeds revenue in the quarter. We expect to see DataSeeds increase its contribution in the second half of fiscal 2026. Cost of revenue was 6.8% of revenue, which was up from 6.4% last year due to the reduction in partner discounts from Google Cloud Services, as well as the introduction of tape deck licensing fees and DataSeeds production costs. SG&A decreased about 6% to $6.7 million for the quarter. This reflects the net savings from our restructuring, partially offset by investment in ramping DataSeeds and tape deck. GAAP loss from operations was $2.9 million, compared to a loss of $2.2 million last year. This quarter, we took a $3.7 million asset impairment charge related to Emojipedia, while last year we had $1.3 million in restructuring charges. GAAP net loss and loss per share were $2.3 million and 18 cents, compared to a loss of $1.7 million and a loss per share of 12 cents last year. On a non-GAAP basis, net income was $0.8 million and EPS was 6 cents, compared to a loss of $0.2 million and a loss per share of 1 cent last year. Cash flow from operation was $0.9 million and free cash flow was $0.8 million for the quarter. Adjusted EBITDA for the quarter was $1.1 million versus negative $0.1 million last year. From a liquidity perspective, we ended the quarter with $19.1 million in cash and cash equivalents and no debt. In addition to our dividend payouts, we still have about $500,000 available under our current buyback authorization. I want to point out one item as we look to our Q3. Last year, we had a one-time benefit to revenue of $450,000 related to an integration bonus from an ad partner that will not repeat this year. Thank you for listening to our second quarter earnings call. We look forward to updating you again soon when we report results for the third quarter of fiscal 2026. Operator, please open the line for questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. To ask a question, you may press star then 1 on your touch-tone phone. If you are using a speakerphone, please pick up your handset before pressing the star keys. And to withdraw your question, please press star 2. At this time, we will pause momentarily to assemble our roster. Thank you. Our first question is coming from Alan Key with Maxim Group. Your line is live.
Yes, hi. Nice quarter. For DataSeeds, could you kind of walk us through how you think about? I know you're building a pipeline, but as you get these, how long do you think it takes to be able to deliver on a win, and how is this considered? You know, how you think about it from a margin perspective potentially when it scales, and anything else related to the pipeline and the size of orders that might be in the pipeline. Thank you.
Hi, Alan. Thank you. A couple of different observations about DataSeeds. As we've said in the past, DataSeeds is a B2B offering, and from what we've seen, the progression of a deal depends on how well a proof of concept goes. If we deliver well according to spec in the time frames that we are given, the customer has interest in coming back to us. The growth of those deals is very much dependent on what the customer needs, whether it's a custom-made deal, whether it's an off-the-shelf deal, and we are still in the midst of refining that process to make sure that we are investing our resources in the right area, with the right data, with the right prospects, and so on and so forth. In terms of margins, thus far the margins have been attractive. We do have target margins, but margins are also dependent on what type of deal it is. Off the shelf will command a lower margin than custom made by and large. And pardon me, and depending on whether or not there is a middleman, meaning a marketplace that's involved, that also impacts margin. So these are all variables that are being considered by us as we further invest in expanding this business.
Okay. And last quarter, I think you mentioned you would. So this makes perfect sense for you guys on photos with your having guru shots. But you also, I think, mentioned you might be looking at other type of data. How are you thinking about that now?
Yes, we are focusing on multimodal data that can be images, audio, and or video. So we are focused on each of those verticals in terms of actual data. The typical entry point is based upon our reputation and business in the image space, but we've already completed one proof of concept on the video side, and we're speaking to several prospects about some audio work.
That's great. On your alpha product launches, you mentioned you launched 2 more to get to 4 out of 6. Is there anything you can comment on the 2 new ones?
The 2 new ones literally are fresh out of the starting gate. What I can comment on thematically is these are being built off of a foundation that continues to evolve, such that we can build things in a much more modular fashion, allowing us to accelerate and get stuff out the door sooner rather than later. We also are expanding and monetizing not only through subscription, which was SynCat related, but also through advertising. And the refinement that we have in terms of even selecting what to produce next is continuing to improve. We've run fake door tests against a cohort of different ideas that we have researched through using various industry tools, measuring where is there traction in the market sizing, and then taking a look at things like conversion rates, cost for acquisition, amongst other KPIs. And after we've analyzed that data across a cohort of different ideas, we will select 2 winners, and then we start the development process. The goal is ultimately to have a foundation which allows for very fast turnaround so that we can build in a modular fashion, as opposed to having to start from scratch every time we go out with a new app.
Right. And you're still seeing good momentum on subscription revenues. Is anything different in what's driving that, or kind of the same trends?
Yeah, what's driving it is really our ongoing investment in optimizing our subscription offering and trying to find those pockets of prospective subscribers that will be attracted to what we have to offer.
Okay. In terms of Zedge Marketplace, that's also doing very well. Talk a little bit about kind of what's been driving that.
Well, it goes without saying, our fiscal Q2 overlaps with year-end advertising spend.
Right.
Pardon me. And furthermore, we've been doing a lot of work on the data science side in order to better segment users and optimize their performance from a monetization perspective.
Okay. And in terms of your active users, how are you thinking? What's your strategy there on trying to increase that?
Sure. So we've got 3 tracks underway. Number 1 is marketing. Trying new marketing mechanisms that we've not used in the past. Let's just say influencer marketing. Number 2 is we're testing new product features and capabilities that will draw back users on a daily basis. Just by way of example, we're going to be testing the notion of offering alarms such that you can wake up in the morning to an alarm, and a user would need to interact with the app in order to turn the alarm off. So product features. And then the third is that we've got a data science project that we've initiated to help us better isolate prospective new users that we can bring into the app based upon the wonders of data science.
Okay, that's great. I'm sorry, I forget your the marketplace where you're offering independent music makers where they can get the royalties. Could you talk a little bit about how that's progressing?
Sure. First of all, as an aside, there was a really fantastic article that came out in Billboard magazine over the course of the last couple of days, featuring Tape Deck and really touting the value that Tape Deck brings to the world of indie music. In terms of the actual product itself, the KPIs are trending in the right direction. We are slowing down in terms of ongoing product development and focusing our efforts more closely on expanding our music catalog. The need to find and build a music catalog that will be attractive to users, that is material in size, provides variety, and exposes users that are hyper fans to their respective indie musicians, is table stakes for the success of that business. And that is where we're shifting our focus to, because most of the product needs are completed, at least for this phase of the rollout.
To what extent is discovery important for the success of this? As maybe people don't know the particular artist, and but then if they can find he or her, might get excited and do it. How do you engage that, or how do you think about that?
Discovery is obviously important, and if one opens up the tape deck app, they can search for their artist, who will come back. If their artist isn't there, it will recommend alternative artists, genres, and so on and so forth that align to that style. But what we've also started to do is to work directly with artists that are within tape deck in terms of promoting the app to their fan base.
Great. Okay. Sounds good. Thank you so much.
Thank you.
Thank you. As a reminder, ladies and gentlemen, if you have any questions, please press *1 on your keypads. Thank you. As we have no further questions, this will conclude our question and answer session and our conference call. We thank you for attending today's presentation, and you may now disconnect.